Hey everybody, Warren Alcon here, and for the next 3 classes, we're going to be going over candlesticks. So let's go. Now in the last video, we got familiar with the basics of chart patterns and trend lines. In today's class, we're going to be touching base on candlestick patterns. These patterns are drawn out with the trend line tool, but are not really bound by many rules. We simply look to draw out an abstract pattern. So what we're going to cover are 3 general reversal patterns to be familiar with. The double top, the triple top, and the head and shoulders. And each one of them has an inverted version. And just like in the last video, we're going to approach these patterns with just a sense of abstraction. So first up, we have the double top and the double bottom patterns. So it's considered a bearish reversal pattern formed when the price reaches 2 highs with a moderate drop between the 2 peaks. It can possibly signal the end of a medium or long-term trend. This pattern is confirmed once the price from the second peak drops below the recently formed support level right here, which is called the neckline. If price does not drop below the neckline and it bounces back upwards, the pattern is unconfirmed and the uptrend could still continue. So let's get into how we use this double top formation. So what we're looking at is the initial upswing in price action. There is a moderate dip and the second upswing. On the lowest point of the dip, we'll draw out our neckline like we did right here. So let's get into how we use a double top formation in real time. So what we're looking at is this initial price upswing. There's going to be that moderate dip down through here. And on the lowest point of the dip, we drew out our neckline. Now, price bounced off of this area of resistance up here. It's moving downwards. We're looking for price to fall below the neckline, to bounce off, to see if it can continue downwards. This action is going to confirm the double top reversal. If price bounces off of the neckline and continues upwards, the double top is unconfirmed. As you can guess, the double bottom is a bullish reversal pattern following the same rules. We look for price to break the neckline, come back, and it bounced off and price did continue upwards. Now we have the triple top and the triple bottom. So these are another reversal pattern. And because it has 4 touches, it can also be seen as a continuation or channel pattern. It's formed when price reaches an area 3 times near the same price level, forming an area of resistance. We draw out our neckline and see how price reacts to this level. If it bounces off and continues upwards, pattern's unconfirmed. If price falls below the neckline and continues downwards, the pattern is confirmed. Triple bottoms adhere to the same principles, just in reverse. So now with the triple tops, we can use the head and shoulders tool to draw out our pattern. It's over here to the left, under patterns, go to head and shoulders, and you can just draw it out on your charts. You can do shoulder, the head, right shoulder, and down. I prefer using this tool because it automatically draws out the neckline. If you drop the line below, it disappears, so I always just keep it there. And there you have your neckline projections. Now with triple tops, triple bottoms, head and shoulders, we have what's called a slanted neckline. It can either be horizontal or you can have a slant to it. Now the slant could actually turn into a long-term projection tool. If you have an upward slanting, price could react to that in the future. On the downside, price can also react to that in the future. So as you can see here on the polka dot time frame on the daily, we use the head and shoulders pattern tool to draw out our triple top. We had the upswing, and we had 3 peaks around the same area of resistance. Bounced off this area of support. The neckline gave us a nice projection, but price did in fact continue to move downwards once the neckline here was tested, pulled back, and continued downwards. Why I like these tools, see how this neckline is moving upwards. In a recent time frame, we have another trend line here. We never know. Maybe something around February 2024, maybe price action will reach to this point. But that's the fun thing about triple tops. And now here on Ethereum, we can see triple bottom. Same rules applied, the neckline drawn out, price didn't even reach the neckline, continued upwards and kept moving. This neckline here, as you can see, is still holding some relevance. Price action is still reacting to this level on some way. Now, last up, head and shoulders, and the inverted head and shoulders. Very similar to the triple top, the head and shoulders pattern forms when price stalls at 3 levels. This time, the middle peak is higher than the outer 2. This pattern is considered a stronger indication of a reversal because the third peak forms a lower high, which shows that there is a loss of momentum and that a greater chance of a possible trend reversal is close. We can let the tool draw out the neckline for us, the same as we did with the triple top. And of course, you guessed, the inverted head and shoulders is a bullish reversal pattern. Again, the same principles, just in reverse. So you've seen this in the past class. This is my favorite kind of discovery I made. We have a head and shoulders pattern here. The slanted neckline is drawn out. And you can see how price did react to this level for quite a while. And it really did a lot of use when it really showed back in January how price broke above, and we've been in an uptrend for the bulk of 2023. Now here on Uniswap, it's a little more abstract, but you kind of get the good idea of it on just how to spot these odd patterns. We do have left shoulder, head, right shoulder. We have that neckline. Price broke above, came back, it retested off this level in a rough way, but price did and still is continuing upward. So as we already know, on the higher time frames, the information we see holds a lot more weight, but it's a lot slower to develop. So when we see these patterns are confirmed, it might technically be too late to maximize our trade profit potential. So in order to take advantage of these reversal patterns, we look into the lower time frames to see if there are any signals that could help us get an early trade setup. So let's look at ETH on the daily time frame. Okay, and we're going to go back and we're going to reference this area right here. You see that was a triple bottom and it's drawn out with a neckline. And we see, in fact, that price did break above the neckline and it continued upwards with a very small pullback right here. At this point where we would have set up a trade entry for a long position at around 1350, roughly, which would have roughly given us a 40% gain in about 28 days. Now, that's based on the premise of this pattern completion, which really did happen. And that is actually the safest position that we can take. A lot of traders do wait until they get the pullback and make sure that the pattern is completed. But what if we wanted to be a little more aggressive and take advantage of an early reversal entry instead of waiting for the pullback, especially here on the daily? We did miss a little bit. We want to be able to catch and take advantage of a little bit more than just that 40%. We want to see if we can maximize. So let's look into this area right here to see if we can actually get close to that 85%. So moving down into the hourly time frame, we're looking at the peak of the right shoulder and our triple bottom pattern. And here you can definitely see a lot more information. You see our neckline, and we even see an area, static area of support, which is actually a little bit of resistance right now as well. So it's fluttering between this area. So let's remember our previous class to see if there's any other trend lines that we can draw out to see if there's a chart pattern. And I can kind of see one right here. We're going to just go from here and it's going to draw and extend it out. And we see this little descending channel pattern. And right here in this area, you can see how candlesticks, they're reacting to our static and our dynamic areas of resistance. Price broke through both. It retraced, had a little pullback right here, and price started to continue upwards. This right here is a textbook example of confluence. It's giving us our early reversal trade opportunity that we could probably set probably right here, 1090. Once we saw this rejection here and this price pullback, we could probably set it right there. This up here was our original entry around 1350. So with this new information, we gained about 23%, which is taking our 28 to 31 day position from a 40 to over a 65% gain. Now there is more risk in taking this early reversal entry, but if things work out in our favor, you can see that it's well worth it. So we're going to zoom back out into the daily time frame again. Let's reset the chart. And once again, we want to look at how this slanted neckline acts as a long-term dynamic trend line. See how price is still reacting to this level. 16 months after it was set, this area is still holding some relevance. And it's a great tool to use as time moves on because you never know exactly where price is going to go, but this is a really good indicator for long-term projections. So now that we're finishing up with chart patterns, here's something really quick I want to go over. Being familiar with these patterns is important because they're a great resource for you to tap into when we are reading charts. But there are also a lot of different patterns out there to learn about. So instead of memorizing patterns and holding an absolution to what they are, instead be comfortable with translating how price action is reacting to these static and dynamic trend lines that we're drawing out. In the next couple of lessons, we're going to be diving into candlesticks. But until then, please don't forget to hit the like, subscribe, and share buttons to help support the channel. So, homework. Until the next class, go through your charts on the daily, hourly time frames and see what patterns you can identify. See if there's any long-term necklines that are still relevant. And of course, here's another step to our confluence checklist. We're going to be looking for price action, reacting to support and resistance areas, chart patterns, candlestick patterns, everything all checked out on multiple time frames. So see you next time.